This was a critical week for copper, not because of a headline, not because of hype, but because copper quietly confirmed something important. While silver surged and the dollar weakened, copper held its gains. That matters. Before we look ahead, we start the same way. We review the prior forecast, because accountability matters. Last week, we said copper was in a constructive consolidation, not a topping process. We said as long as copper held above key support, the market was building energy, not distributing. Copper closed the week at $5.41. That keeps the forecast intact. This move in copper was not speculative. It was driven by real demand expectations, infrastructure spending, grid expansion, electrification, energy transition demand. At the same time, supply remains constrained. This is not a paper trade. This is a strategic metal repricing. Now let's talk about the weekly rhythm. We continue to see the same pattern. Early week strength driven by Asia and physical demand. Midweek digestion as futures markets reassess. Late week stabilization, not selling. When this rhythm repeats, it stops being noise and starts becoming structure. Now let's look at our leading indicators. LME and COMEX inventories remain tight. Treatment and refining charges remain compressed. There is no clear sign of supply relief. Copper is behaving like a metal in short supply, not excess. Now the technical framework. On the retracement side, initial support sits near $5.10 to $5.20. Deeper structural support sits near $4.90 to $5. A pullback into these zones would be constructive, not trend failure. On the extension side, a sustained hold above $5.40 keeps upside pressure intact. A break above recent highs opens a path toward $5.60 to $5.80. Copper is coiled, not exhausted. Now let's add confirmation. Silver closed the week at $62. That matters. Historically, silver strength confirms copper's strength, especially during reflationary phases. Gold remains elevated. The dollar remains weak. This alignment continues to support copper. Now the broader backdrop. Copper is not just a commodity. It's a strategic asset. Energy transition pressure continues. Grid modernization is unavoidable. Resource nationalism limits future supply. Geopolitical risk raises costs. Markets are repositioning, not panicking, and copper benefits from that repositioning. Now let's look forward. Here's the clean forecast. If the dollar index stays below 99, copper holds above $5.40, and upside pressure builds, with potential toward $5.60 and higher. If the dollar stabilizes but remains weak, copper consolidates between $5.20 and $5.50. A bullish pause, not weakness. If a risk-off surprise appears, copper may retest $5 to $5.10. That would likely represent structural support, not a breakdown. This is not investment advice. It's scenario awareness. Copper is volatile, whether through equities, long-term allocation, or exposure. Position sizing matters. Copper rewards patience and punishes leverage. If you're stacking physical copper, silver, or gold, Copper Forecast has partnered with APMEX, one of the most trusted bullion dealers in America. You'll find our affiliate link in the description below. It's a way to support the channel while accessing real, physical metals. And if you want the monetary backdrop behind this entire move, be sure to watch Silver Forecast. Silver continues to lead the metals complex, and it often tells you what copper will do next. You'll find Silver Forecast linked below. We'll see you there. And one more thing, be on the lookout all week for Copper Forecast and Silver Forecast breaking news updates, along with our special reports covering policy shift, supply stress, and structural risks across the metals market. So let me ask you, is copper preparing for its next leg higher, or pausing before the breakout? Drop your thoughts in the comments. We'll see you in the updates.